It's just better to just more or less remove yourself from the risk, okay, and you can always get back in. All right, guys, fractal analysis in price action. All right, what's a fractal? Well, a fractal is a pattern in nature and in many things that as a Christian, okay, um, I believe there is a creator, okay, and um, I give thanks to him on a daily basis for the insights that I've been blessed with, and I share with you. And I think that fractals are one little signature on his part. Also, to show that there's a design to this. Okay, everything around us has a specific design. Okay, it shows intelligence behind it, and everything in nature has this same phenomenon. It's much like Fibonacci. Um, but a fractal is defined simply as a pattern that is repeated in infinite size up and down. In other words, something that you see on one scale, okay, if you scale into it and zoom in, you can see its same pattern repeated on lower levels. And obviously the same thing if you magnify it out and look at it as a macro view. Well, that same principle is in effect in price. Okay, and price because, and I'll give you a real generic way of viewing it. When I say price, okay, what comes to mind to you? Is it a daily chart? Is it a 1 minute chart? Is it a tick chart? For some of you, it may have been a weekly chart, or it could have been a 5 minute chart. It doesn't matter what time frame that we are referring to, it's always just the last price. Think about that. You're looking at price right now. At the time of this recording, the cable's trading at 161.74. That 164 by itself absolutely is useless to you unless you have a understanding of where you're at in terms of the big picture. Okay, by having the big picture and using a higher time frame perspective in your analysis and understanding key support resistance levels, you can go into the marketplace and see patterns that repeat over and over and over again. There's specific fractal patterns, and I'm not going to reveal them all in this module, but you'll have a few of them shared throughout the presentation over the last few parts of the series. But the fractal analysis concept can be applied to the simple optimal trade entry. Okay, what does that mean? How do we go into the marketplace looking for a fractal? What is it? Okay, it's one thing that myself and other folks to understand fractal analysis, we can go in and show you a chart in hindsight and say, look, this is where this did that. This is where this. That's great. Okay, but without a firm understanding of what a fractal is and what it looks like and how it's applied to the marketplace, it's not going to do anybody any good. Okay, so this section is really just going to highlight an example of one form of a fractal. Okay, and there's all types of fractals. There's many different kinds of fractals in terms of price action. But the main thing is if you can't understand what a fractal is on a higher time frame premise, okay, it's going to mean little to no good use to you if you're trying to apply it to intraday charts. Okay, so what am I saying here? Okay, well, in this example, we're going to talk about a fractal. Okay, and this is going to give you a price swing, and we're going to more or less break it down and show you more insights on how price in itself works within a fractal nature. All right, we're looking at this could be any price, any commodity, any stock. It could be anything. But for now, we're just going to talk about this being a currency pair. Okay, so price is trading within a specific range. Okay, and we notice that above where price is currently, this is a key resistance level. Okay, one would expect if we're this close to it, price would eventually try to run up to that key resistance level. Now, as price runs higher and approaches that resistance level, at some point it will hit that level. We as traders and technical traders, we would expect reasonably there would be a pullback or a bounce away from that particular price level. At some point, price will come down in that retracement, okay, and swing low, make a small little short-term low. When that takes place, we now have a new reference point for short-term support, okay? Now, obviously, if we have short-term support here and a key resistance level like that, a technical trader like we are or aspiring to be, when price is starting to bounce again on a short-term basis, we could reasonably expect or anticipate another retest or run attempt to get back to that resistance level. Okay. At some point, it may get up there and blow through it, but on many times it will fail to do that. Okay, and then start to come back down again. Now here's where, if you understand optimal trade entry, and which is basically a 62 to 79% retracement level on a price swing, if you see this, this could lull you into believing that this could be perhaps a bull flag. It could be perhaps another ABCD price extension, okay? Or it could be a top. Okay, we have to go back to the higher time frame resistance level. That takes precedence. That is the one that we have more emphasis behind, not the short-term little blips in the marketplace, okay? We expect sellers to be heavier in market than buyers, okay? And we anticipate price to break below the low here, okay? If we see that break below, okay, that's going to give us a shift in what? Market flow and market structure. We're looking at a market that's breaking down if this low is taken out. Now, if price does break down lower and breaks through that, now we are confirmed we have a bearish market flow and a early market structure reversal. Okay, so now we could reasonably expect this higher time frame optimal trade entry. Okay, that would be the higher time frame turning point, and now we could look for continued sell signals. Okay, so we see here a very standard optimal trade entry top formation. The market broke down. Okay, in itself, this is a fractal. Okay, look at this pattern right here. This in itself is a pattern that is applicable in fractal analysis. As price breaks down and moves further lower, okay, go back to the concepts that we just learned in part 2 of the trading plan development series. Range contraction, range expansion, and trading range to trend to trading range to trend. Okay, so consolidation to trend, consolidation to trend. In this region here, even though we saw price movement up, down, to make that optimal trade entry formation here, that's still a consolidation. See the range here? That's a consolidation. This move here is the trend, okay, or the price swing out of consolidation. So now, when price breaks down like this, what do we as technical traders expect to see? Another consolidation. So what's going to take place in the consolidation? It's going to be a bounce. It could trade up to another resistance level, okay, which would be an old support. And price will eventually trade back into a consolidation, okay, and we can now look for, inside this consolidation, smaller short-term optimal trade entry tops. Think. We have a higher time frame price leg that's already turned on a higher time frame key support and resistance level. As price broke down, we are now in our minds focusing on lower level 5, 15, 1 hour basis optimal trade entries to look for what? Lower prices. Okay, so by having this mindset going in and trading during consolidations, we're essentially limiting our exposure to the market by only selling short, basically an established weak market. Okay, and we have a bias going into our analysis, so we're not going to be subjective and just be lulled into buying and selling simply because the price is doing whatever it's doing at the time we sit down in front of our monitors. We are focused on one specific process, and we have the higher time frame, support resistance levels on our side. We have the fact that we have broken market structure, market flows on our side. Okay, because now think, just looking at this price chart right here, if this is a currency, market flow is still bearish until we take out this swing high. Before this swing high formed, market structure was still bearish until this swing high was taken out. Obviously, we keep making lower lows and lower highs, and we maintain a sell scenario in our trading, looking for shorter term, where it's lesser time frame, fractal pattern of optimal trade entry tops. Okay. Again, price will stay within this consolidation as price moves up. Inside of each one of these price legs, every single one of these, if this is a daily chart, every one of these smaller price swings in here, if you look at smaller time frame charts, you'll see optimal trade entries on a lower time frame near the highs and the tops. They're going to be there because it's fractal in nature. Okay, it's going to be there. I guarantee you. We're going to look at some examples because I know you're probably scratching your head saying, okay, this is great. You're just showing me a line chart, Michael, but I really want to see. I want to be able to digest what you're showing me, and I'm going to get to that. But this is the theory, okay? So we have to have this before we go into the price chart. Otherwise, this is going to look like I'm cherry picking. And eventually, price will move outside of the consolidation and into a trending move again. So we move from consolidation to trending move to consolidation to trending move. Now we have a complete fractal on the higher time frame. Inside of this overall price structure, this pattern can be broken down into smaller subunits on the lower time frames, and you'll see the same pattern you see here on the lower time frames as well. By having this perspective going into your analysis, having it on a higher time frame first and then moving down to a lower time frame, it helps with your daily bias. It keeps you on the right side of the market generally, unless there's a major market reversal. But hopefully, if you're monitoring the macro view anyway, you should be anticipating that anyway, unless there's an act of God or something that, unexpected takes place and rocks the market. Okay, so we have our fractal pattern here. It's a downswing in price. This is a swing that you can see in any time frame. It's not limited to any specific one, but what would it look like in a real chart? Well, it just so happens that I'm looking at the cable, and we're going to use today's example, so it's more timely. It's something that you can look at right now. I know some of you probably are watching this video probably years from the time I did the recording, but as of the moment I did this, I screen captured what price was doing, and this is a 15-minute chart of the cable, British Pound USD. All right, and if you look at this, we have a major resistance level here, 163. Price trades up to that, much in the same way our crude example to the left shows. Price goes up, comes down, okay, and then comes up and makes another attempt to get back to that resistance level, but it fails, and it gives you an optimal trade entry. Note this low right here, and now note the fractal example in the upper left. That's that low that would shift everything to bearish, okay? That is broken here. So now what you would be looking for is optimal trade entry sell patterns, because now you are in an established bearish market, okay? Everything you do from that point on should be looked for selling, okay? Even your scalps, okay? If you're an intraday trader, look for smaller short-term optimal trade entry sell signals, okay? Focusing on one pattern in fractal in nature, you can find several opportunities in this example alone that gives you optimal trade entries. For instance, this optimal trade entry that we see here, when it broke this example of market flow changing to bearish, this swing high has to break before it becomes bullish again. Price moves lower, trades up, and inside here, just this small little time frame movement in here is a small optimal trade entry in here, and then sells off. Look at this high here to this high here, this low here. Do you see how price trades down, up into an optimal trade entry, and then look at the sell-off? See that? Look at this high here, and this low here, and this high here. That's optimal trade entry. Okay? Look how many times it gives you optimal trade entries just in that small section of time. See this high here to this low here? Price trades down, comes all the way back up, optimal trade entry, sells off again. Look at the price structure here. It trades down, comes back up, optimal trade entry again, sells off. You see how by using a higher time frame premise, you can use fractal analysis to keep you on one side of the market, keying off of one specific approach to trading, in this case being a seller, and it will keep you more or less, with the right bias. Okay. Now, notice the high to low here. Okay, this high to this low. This is one price leg, or one major dominant price swing. Then we had a major retracement deep in here. Okay, if you go and look at this high here to this low, we have a optimal trade entry. Okay, so now think about it. We used the fractal pattern here in this leg here, but now zoom out and don't look so close. In other words, if we move maybe to an hourly chart, you would see this high to this low up to this high as a fractal pattern in the same capacity it shows here. Okay, so this high to the low would be more or less established in an example of being this high to this low, and this low to this high would be crudely exampled by this low to this high. So watch what happens. The same concept is now going to be applied with this price swing from high to low to high. This is the low. Market structure breaks down here. Okay, see this low? It breaks right there. So now what do? You look for optimal trade entry shorts. Here's your high, trades down to a low, starts to run up. What do you expect? Optimal trade entry. High, low, here's your retracement, down. Look what happens again. See this high to this low? Optimal trade entry, down. Okay? Same thing here, very short term. High, down to low, and in here, this is where we start to see what? A breakdown. It did not fulfill. Look what happens here. See what's happened? We have this high turn. So now we have a probable change in direction where now market flow has shifted to bullishness. So this fractal is now a replication of this price swing. So if we look at this high to this low in terms of pip magnitude, in other words, the price swing, it's replicated in terms of distance. In other words, this range from low to high is essentially the same thing you see here, this high to this low. Market turning points. All right, we talk about market flow and we talk about market structure, but without having it understood on the actual individual candles or bars, it could be a little unnerving to some folks that are just starting to watch this and scratching their head thinking, what am I supposed to be looking for? Well, regardless of what time frame you're looking at, okay, if you have a pattern that is looking for a sell scenario, okay, you're looking for a sell scenario, there are several opportunities to use price to get you into a move. Okay, and for instance, we're going to take this is a turning point for a sell. As price runs up, and we're going to be assuming that this is a resistance level up in here of some kind, and maybe this is a 5-minute chart. Okay, you zoom down to a 5-minute chart into that resistance level at a time of day when you would expect the turn to take place, for instance, London, and we see the price run up, okay, on this one candle here. So it's going to represent, in this example, a 5-minute candle. Then we see the lower candle here form. So now we have a 5-minute swing high. Now price will come down, okay, and it may even come up here. Now what does this look like? This would be what? An optimal trade entry sell signal, okay? In here, we have another short-term swing high. This is a high with two lower highs. Oh, I'm sorry, with two lower highs on either side of it. So if you see this pattern, okay, and this whole range could be as little as 5 pips, 10 pips, okay? You could be selling right here on this candle at market, okay, or you can use a break below this candle here on a sell stop. Okay, so if you break down here, this would be selling on a stop or selling at the market, okay, or using this low here, okay, because we have a low with a higher low on either side. This is a swing low. We can use this low as a indication to sell on a limit at this price or higher. So if we're, for example, we'll say this is the cable, and this price is 161.50. We could have a limit order to sell at 161.50, and on this candle right here, once we see this candle close and it starts to open up here, entering a limit order at 161.50 to sell would fill you on this candle, and then we would expect and anticipate price to break down below this low. And if we see that, that's what you expect to see in market turning points, and then you can look for range expansion to the downside, and then manage your stops above the respective the highs up here as well. Okay, obviously the same thing applies as reversing it. If we are expecting bullishness in the marketplace, we're going to assume that there's a support level down here. We wait for, again, this is a 5-minute chart. We could see a low with 2 higher lows on either side of it here, and price runs up, okay, and eventually starts to come back down again in here. It doesn't have to do this, okay. You could just use the previous swing high here, and if it breaks that, obviously that would be what you're looking for, but you want to be getting in before the expansion takes place. You want to be getting in when prices on a tear, starting to run. You want to be in before that. You want to be in the accumulation phase like we have here. This is a consolidation. You want to be in that, okay? So if we do get an opportunity where it comes back and gives you a smaller short-term little optimal trade entry in here, that's ideal, okay? So you can use this swing high here, buy on a stop above this high here, or you can put a limit order at this price or lower, okay, to get in long. And then obviously using the swing low and 30 pips, 20 pips, whatever your risk management is going to permit you for the trade to do your long setup. And then obviously you anticipate, once you get in the move, you anticipate expansion, and then when you start seeing these short-term swing highs break out, okay, then you have what you expect to see in your trade, and then hopefully you reach for your upper objectives in price for your profit taking.